One thing I think you're going to hear about from all of the speakers this evening are about avoiding being underinsured. And so I have a couple asks I'm going to make of everyone, things you could do just to get started on this path. And the first one is about looking at your homeowner's insurance limits and trying to determine if you have enough coverage. And because people really want to avoid talking about insurance, typically, we tend to kind of try and ignore it and put it aside. And luckily, the likelihood of ever having a total loss is very, very remote. You know, it's millions of homes in California. The odds are you will never suffer a total loss. Unfortunately, that is what everyone thought that also suffered a total loss. And so, you know, it's important, that everyone take a look at their insurance coverage. It could mean, that you're going to pay a little more in premium. I think you'll find it reassuring to know that you have the right coverage should you ever need it. And so what you need to do is check around in your region and see what construction costs are like. I will say that when we were helping people who had claims in Napa and Sonoma, there are people whose the limits they had reflected what was a $200 per square foot construction cost. That might have sufficed 20 years ago, but their limits were purely out of sync with the reality. A lot of times people set it and forget it, their limits. They purchased their homeowner's insurance coverage 15 years ago with their insurer. They just rely on the inflation factor that an insurer applies each year to keep them up to date, but it's not enough. You really need to make sure, and even the $350 I show here on my example slide is probably not nearly enough for many homes in Marin County. Next slide, please. So another issue that we deal with folks who have had a loss is the difficulty they have putting together their contents claim, right? It's really challenging if your home is gone to try and remember everything you had. And it's actually a painful experience, right? To think of every little item that you have lost. I'm going to suggest that just to get started, this is an easy thing to do. It just takes a few minutes. Walk through your house with your camera or readily your cell phone and take pictures or film your contents. Your living room, family room, whatever, your bedrooms, inside your drawers and closets and cabinets. This doesn't take the place of doing a full inventory, but at least gets you a record of some kind of what your possessions are. These films and pictures can also help you if you do have a claim in supporting, what you do put in your inventory. But this is just an easy get started thing on documenting the contents in your home. And next slide, please. And since you've you take a look at your limits for your home, that's critical. Document your contents. The next thing you want to do, maybe get outdoors and just get started. This is probably something everybody who's in the fire safe community already knows, but for those who are new to thinking about these issues, if you just get started with those first 5 feet that are right adjacent to the exterior of your dwelling and trim back any woody plants, move any firewood away from your home, any wooden lawn furniture you have stored up against your house, or wood chips, dead leaves, debris. You want to clear those 5 feet so nothing's right up against your home that can lead to igniting your home. So that's again, just to start, just like these first two steps, this is the third step, and this gets you outdoors. And just like that, you've gone from preparing for a fire loss by checking on your insurance coverage limits and documenting some of the possessions you have, to working on your exterior and possibly preventing a fire loss and hopefully never having a need for your insurance. And it really doesn't take much time at all just to get the process started. And so that's what I'm hoping everyone will do. And I think, getting those first couple steps leads to the next. So if we could go to the next slide, please. All right, you already heard a mention in the fun facts about renters. And I will say one of the difficult challenges that we come across when there's a local assistance center after a major wildfire event, people coming in for help. And a lot of people coming in are renters, and they do not have renters coverage. And they wonder, well, what can they do now? There may be some community assistance plans or something to help them. But really, the best way to protect yourself is to have renters coverage. And, for some of you who maybe are landlords, asking your renters to purchase renters coverage not only is good for you, but it is more important for them. First, of course, they have the benefit then, if there is a fire, they have additional living expense coverage. Usually for a renter's policy, they'll either have a year of additional living expense coverage to find another rental, or they'll have some percentage of their contents limit. But at least, if the place they were living in as a renter is gone, they get some funds to help them find another place to live. Next slide, please. So, of course, everything about insurance is interesting, even though you may not have appreciated that in the past. But here's one little fact that kind of ties into my first slide about bumping your limits up. If you do look at your limits, and even if you only bump the limit up on your dwelling by 50,000, that bumps up your coverage package in total by 100,000. And that's because all the additional coverages that apply in a homeowner's policy are all percentages of that dwelling limit. So if you bump your dwelling limit up, your contents limit also goes up, your other structures limit goes up, your additional living expense coverage goes up, extended replacement costs goes up, your debris removal coverage and your building code upgrades, they all go up. So $50,000 in dwelling limit increases gets you 100,000 or more in additional coverage in total. So a couple other things about homeowners insurance, good to know, is that most insurers will reject or charge sometimes significantly more premium if you have a home with a wood-shake roof. Again, a lot of you probably know that, or maybe it's obvious, but for those who, it's coming time to replace your roof, it's better to do that sooner than later. And at least some of the costs of replacing that roof will come in have the impact of lower insurance premiums, sometimes significantly lower, because wood-shake roofs are a real hazard for insurers. And many people get canceled simply because of wood-shake roofs. And just a reminder, homeowners policies don't include coverage for earthquake, flood, or land movement. Just something you should know. And if you're in a earthquake region, which includes Marin, unfortunately, you should seriously consider earthquake coverage. Next slide, please. So I just wanted to give everyone a little idea of how insurers really focus on wildfire in terms of their underwriting and rates. And here we have a picture, satellite image of San Anselmo area. You can see the couple the icons for fire engines. Those are where fire stations are located in San Anselmo. And insurers take your fire department into account when they rate your home or underwrite, who's eligible. And you're very lucky in Marin County. You have some great fire departments with terrific scores, protection class 1, protection class 2 for many of your urban fire departments. So that is one consideration. But wildfire model risk scores really focus just on the home where it's located. And as noted here, really the key is the slope, the fuel, and the access to your home. So here you're looking at a property, not too far from a very urban area and a major, school. You can see the pool and the fields. But this particular home probably has a little denser foliage, perhaps is on a slope, and might have a little more difficult access. This may not be a super challenging home. It's not far from main arteries, but this is kind of a little snapshot of what insurers look for when they or what their models use to assign wildfire risk scores. And wildfire risk scores have a major impact, not only on rates, but whether you're going to get coverage or not. And because they've only come into play in the last few years, there's something that, you might have been with that same insurer for 20 years, no losses, and you wonder, why did I get non-renewed? And a likely cause is because they decided to to implement wildfire risk scores, and ultimately to decide to limit their book of business to homes with lower risk scores. And so this home probably still makes it. You move a little bit to the left into denser forest or bigger slope, and you may become ineligible. Next slide, please. And just to give you a little idea of the difference in premium that happens, this is actually from a rate filing that one major insurer made, and it shows this graph in the blue bars. You see where the current premium levels are. The green bar is what the insurer is proposing right now in terms of increases. And the gold bar is the one that they say that their loss ratios actually justify. So you can see on the far left, those are homes with actually a very low wildfire score or moderate scores. This is generally probably a CoreLogic model. CoreLogic and Fireline are kind of the two most commonly used models currently today. So those premiums are hardly going to be moving at all. But as you go up the scoring chart, you see the amount of increase is itself kind of accelerating. And those green bars are rising up significantly above the current premium averages. And really more worrying is those gold bars, because while the insurer in this case isn't asking to move their rates to coincide with those gold bars now, you can imagine that the next rate filing will probably move those premiums up another notch closer to their own indications of where they believe rates should be. And in the end, you see the homes with the higher scores are going to be paying 4 times more than they might have just a couple years before, or possibly be non-renewed if they have that high of a score. So next slide, please. So one thing, and I think you're going to hear a lot about this from the other panelists as well, and that's because it is super important. There are so many non-renewals taking place as insurers incorporate these wildfire models into their rates, into their underwriting, and actually as the numbers of wildfires continue to occur every year, they get more concerned about having wildfire risk. If you do get non-renewed, ask your agent, of course, to shop for you. If your agent doesn't have another insurer in his or her book of business that will take your policy coverage, try other local agents. A lot of great agents in Marin County and surrounding counties. Or many insurers also write directly online, right, over the phone. And just to help you shop, California Department of Insurance has a great top 10 list, how to search for coverage. You're going to hear from United Policyholders, who I work with now, who does a terrific job of helping consumers in the same area of searching for coverage. And something I think you'll hear again and again: don't settle for a fair plan policy unless you have absolutely tried every possible, at least admitted insurer in our marketplace, and hopefully non-admitted or surplus lines insurers as well. Fair plan coverage, very limited. You just don't want to go there unless you absolutely have to.